Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. A parliamentary panel on online pharmacies pulls up the government, says it is appalled that stricter rules have not been notified by the Health Ministry, warns that illegal, counterfeit or outdated medicines could be sold through these avenues in the absence of regulations.
E-commerce and food delivery startups could face fresh regulatory trouble as per reports. The union government may issue rules banning related party or associated enterprises of internet marketplaces from selling products or services to merchants registered on the platforms.
The U.S. commodity regulator files a lawsuit against the world's largest cryptocurrency exchange, Binance, and its founder, CZ, alleges violations of compliance rules to attract users, also accuses the exchange of flouting rules meant to prevent money laundering and terror financing.
Alibaba Group plans to split its $220 billion empire into 6 units. Each of the units will individually raise funds and explore stock market listings. The biggest overall at the Chinese e-commerce giant comes after its founder Jack Ma was publicly spotted in mainland China for the first time in over a year.
Ride-hailing company Lyft has announced that its co-founders Logan Green and John Zimmer are stepping down from their roles as CEO and president respectively in what's said to be a move to arrest the fall in the market share.
GitHub fires over 140 engineers at its India offices. This follows the Microsoft-owned company's announcement last month that it would eliminate 10% of its workforce to cut costs. GitHub has also frozen hiring until further notice.
Twitter CEO Elon Musk says only verified handles will be able to take part in Twitter polls from the 15th of April. In a tweet, Musk said that's the only way to stop AI bot swarms from taking over. Well, those are the headlines we've been tracking for you this evening. AI-powered EMR platform for doctors in India, Health Plus Technologies, has announced the closure of its $22 million funding in Series C, led by Avatar Venture Partners, SIG Venture Capital, and existing investors. Now, the funding round marks the first health tech growth stage investment done by venture capitalists in 2023. To talk to us about the road ahead at Health Plus Technologies, joining me now is its co-founder and CEO, Sandeep Guribanda, and its executive director, Chaitanya Raju. Sandeep and Chaitanya, welcome to Startup Street. Let me start with you, Sandeep. You call yourselves a doctor-first firm and deliver value to other stakeholders like patients, pharma brands, pharmacies, and diagnostic labs. So tell me, what is the pain point you're solving? And if you could talk to me about your business model as well.
Sure. Firstly, thanks, Shruti. Thanks, Arundhati. We must thank CNBC as well for giving us this opportunity. So, it is important for you to know the vision, right? What drives us as a firm, what drives us as people within the firm. We are a super mission-oriented firm, right? So we are there to better health outcomes at a population level, right? When you're thinking of that bigger, grander vision, right? So we have to take a particular child. We could have gone with 1.4 billion people on one side, helping them, improve health. But we could also take another route, which is through doctors. Our firm belief is doctor first is the right way of, addressing this problem. So how do we do it? We look at empowering doctors digitally, real time when they're there with the patients, right? So that's very important. Only then we will be able to assess doctors in every step of the treatment process, right? So it could be like the right treatment for the right patient at the right time. It could be giving them alerts on various risk profiles of the patient. It could be as simple as a drug to another drug interaction. And we do a lot of patient engagement and a lot more, right? So today, we've come a long way in terms of achieving it. Broadly, about 2.5% of entire India as a population, right, is treated on health. It's significant. We do a massive 100,000 consults on a daily basis, right? 100,000 consults is a big opportunity for us to be improving health outcomes.
Yes.
We've come a long way. I think there is a lot more to be done, right? So that's how we are going about achieving our mission.
All right. Let me go over to Chaitanya now. Chaitanya, talk to me about your technology edge. If you could take me through your offerings. Sandeep touched upon a few. If you could talk to me about the products, elaborate more on what they offer.
So like Sandeep was saying, right, we provide end-to-end software for the doctor. So anything that doctor would need in the clinic, from managing his billing, managing his pharmacy, so on and so forth. But at the core of it, the EMR, right? The doctor uses EMR technology to deal, to write prescriptions and to engage with his patients, right? So beyond that, we also provide the doctor with a whole host of AI-powered clinical assistive tools that help the doctor, improve patient outcomes, right? This is related to the smart scan that you're seeing on the screen here. This is drug-to-drug interaction information for the doctor. And all of this is provided to the doctor at the time that he's treating the patient when the information is more relevant for the doctor, right? So this makes it super powerful for the doctor. So so at the core of it, we are empowering doctors deliver better outcomes to their patients by with digital tools.
All right, Sandeep, you mentioned the fact that, you're treating 2.5% of the entire Indian population. If you'd also talk more about the reach, how many doctors you've got on board and how many patients have been treated using the HealthPlix EMR platform till date.
So about 2.5 crore, patients have been treated on HealthPlix platform today. Roughly about 65 million consults we've done in the last few years, right? We look at consultations as a single biggest metric because every consultation is an opportunity for us to drive health outcomes. So on an average, monthly active users, about 11,000 doctors, we want to grow from where we are to 50,000 doctors, right? So for us, doctors is not just like a listing on a marketplace or a portal. They have to use EMR to treat their patients, right? Live, real time. They have to be users themselves. While the doctors talk to the software should be able to talk back to them. This is how we define our users. And every patient who gets treated by the doctor will become a patient of HealthPlix as well.
Okay. Chaitanya, coming back to you, let's now talk about the $22 million raised. You plan to use the funds to ramp up doctor-first product innovation, enhance the technology stack, and scale user acquisition efforts. If you could elaborate on these plans and any new products in the pipeline.
So a big chunk of this money is going to go into building stronger technologies for doctors, right? So we believe that empowering doctor is super important. So building out clinical and AI-driven assistive tools for doctors is going to be a big focus for us. We're going to double our engineering team to about 100 engineers and also invest in the product team to make more and more enhancements possible for the doctor, right? We're also going to invest heavily in integrating our software with various med devices and other platforms that are out there. So if a patient is measuring, their health records at home, sugar values, blood pressure, so on and so forth, that data can seamlessly flow into the EMR and help the doctor with additional information while treating the patient, right? So this sort of technology, we're going to invest in. In addition to that, it is super important that we scale a product and make it available to more and more doctors across the country. Getting to 25,000 doctors next year is super critical for us. And we're going to invest heavily in the doctor onboarding team, which will go out, to the country, various cities, small towns, villages, and get doctors to start using the platform, right? So that'll be a big focus for us as well.
Okay. One final question to Sandeep, and if you could quickly answer that, if you could talk to me about the current business growth numbers and also elaborate on your revenue model and what is the road to profitability looking like? How are you making money?
Yeah, for us, belief is we need to get doctors and patients onto a platform. Anybody who needs a go-to-market in terms of selling something to a doctor, selling something to a patient, we're just an API away or a product away or a link away, right? So we have, that's our business model. While the vision is to drive health outcomes at a country level, business model enables us to grow, right? In fact, we're looking at profitability very, very keenly. 12 to 18 months is a target that we have set ourselves to, achieve that. And we've got Avatar and SIG who firmly believe, right, the doctor-first model is the right way to achieve this. So, we are super happy to have them on board.
All right, we have to wrap up this conversation now. Many thanks, Sandeep and Chaitanya, for joining us on Startup Street today.
Yeah, thank you so much.
Thank you very much.
And from one fundraise to another, solar tech platform Aram has raised $5 million in a pre-series A round from climate tech investor Avana Capital. The startup also saw follow-on participation from Bloom Ventures, which included a debt financing of $1.5 million from various financial institutions. Now, Aram will use the funds to expand its suite of offerings. And joining me now to discuss the company's growth plan is Anand Jain, the founder and CEO of Aram. Anand, thank you so much for joining us on the show today. Like I said, you're a solar tech and financing platform. Talk to us about how you help MSMEs across the country implement rooftop solar systems. How are you creating value for them? And talk to us about what it is that you exactly do.
Sure. Thank you, first of all, Arundhati, for having us on the show. And thank you to CNBC as well for giving us the opportunity. So we Adam's mission is to solarize every roof or every industrial roof, and that's what we want to do. And the problem we saw was that MSMEs were not able to get a good quality roof. The quality suffered, and there was lack of confidence within them, or they lacked the information to get a system integrator for an EPC company, and also they lacked access to credit. So what we helped MSME, we created a sort of a overall full stack solution,
Right.
where we help them with not only just financing. So we have an in-house NBFC that provides them credit, but we also have a quality solar engineering team that helps them guide through quality specifications and implementation of the solar plant.
Right.
So that's what we do in terms of helping them get solar. That helps them really save a lot of cost on the energy side.
Right.
So an MSME, suppose in Maharashtra, pays about 9 rupees per unit of power, and solar costs about, say, between 3 to 4 rupees. So they significantly save a lot of capital that halves their energy cost immediately from day one, and they start to save. And the EMI gets paid out of the savings itself.
Right.
So that's the value proposition we bring on board, and that's how we help MSMEs.
Right. So you help them save quite a bit on the energy side. Now, with the fundraise, you're going to utilize the funds that you have on offer to expand your suite of offerings. So what's in the pipeline?
Yeah, so we have quite a few things that we're building. So we have multiple tech platforms. So first of all, being the solar tech platform that includes a quality stack, and that also includes a set of digital offerings for the installers, because the whole space is unorganized. When I talked about the problem statement within the MSME space, that why it's not taken off really solar in India is because there is lack of confidence within the MSME community, right? Or which is the adopter of the solar system and the lender, right? So we want to. Sorry, I sort of missed the question. I lost the train of my thought.
Yeah, no, we just wanted to know what's in the pipeline in terms of what you have to offer.
Yes. So the quality platform that helps them get the quality stack. That's the solar engineering team that uses the platform, right? And then there's a monitoring platform. After the plant has been installed, we help track the system real time, and that helps give him any alert required real time, or we send emails to him that the plant is not working.
Right.
So that's the
all right. So, speaking of your offerings, you also have, like you said, it's unorganized, and you also offer loans through your in-house NBFC. So what's the demand you're seeing for loans and with this offering, and what about NPAs?
So first of all, we don't have any NPAs. So we have an NBFC, but we have a credit platform also. So we work with partner banks. So we enable a lot of business for our partner banks through the platform, right? And our NBFC does exclusively loans for these solar systems. And we are spread across the country, north, west, and southern India. And there are no NPAs that we have. And forget NPAs, we don't have any DPDs. So these are, hassle-free and sort of quick tagged loans that we enable for them, which includes sort of intervention on the quality side that helps the MSME customer.
All right. And what about revenues? Where will you end this year? What's the mix between all of your businesses? Where are you seeing most of the revenue coming from?
So number one is the credit platform, right? Where we partner with banks, and that's what we will see, right, going forward. So we have a few banks on the platform. So that will bring in our revenue share and fees through that platform. Number two is the quality platform, which is, we call it Terram Asset Assurance and IROC. That will help earn revenues on the quality side when we implement these quality things for someone who doesn't need our financing. And third is the NIM, basically the NBFC we have, which is where we earn NIMs.
All right. And where are your revenues at, and where do you see yourself ending this year?
So yeah, we are doing pretty well, Arundhati, on the revenue side. So last year when I was on this show, we've grown about more than 2.5 times on revenues, and the teams have grown. And we want to close the next fiscal at a very healthy pace of about, say, 5 times where we are currently. So we're seeing very healthy growth, and that's why you see that we raised some additional capital, because the funds, like the Havana, has recognized our growth and what we are building.
Absolutely. If you could quickly tell me, the solar industry in India has been growing rapidly in recent years, but most people are still a little bit scared to shift to these kinds of energy means. So what's the opportunity here and what's the biggest challenge?
Yeah, so, I came into solar when solar was zero in India, literally back in 2009. And it's come from 0 to 65. So I've seen it scale. And solar is really entering its, I would say teenage years. So you would say the teenage and the adulthood is ahead of us for solar really. And it's a massive opportunity. I mean, it's inevitable that most of the energy source, a large part of energy source will shift to solar. Because coal is being capped. Nuclear is not an option, like it can only plug in certain gaps, right? And gas obviously again is very, very carbon intensive.
Right.
So for a clean, green solution, which is cheap, solar is the way to go. And India, just MSME space itself almost is a $500 billion opportunity. So it's massive, and we just starting to see the takeoff. Right? We've been building RM for the last 2 years, but we just on the takeoff stage. And last 5 years, so overall, I've seen it grow about 75% every year at a CAGR of 75%.
Yeah.
So, and you'll see that growth further accelerate in coming years. There's massive tailwind for clean energy and climate sectors, and top it up with a very, very cheap solar cost of solar power.
Absolutely, Anand. So big opportunity there. Thank you so much for joining us on the show. We're completely out of time, but we wish you all the best going forward.
Thank you.
With that, it's time for us to head into a short break. Coming up next in our special series, the Unicorn Health Check, we put the spotlight on India's B2B e-commerce unicorns. Stay tuned for that.
Welcome back. You're still with us on Startup Street. It's time for our special series, the Unicorn Health Check, where over the past 1 month, we've created a report card of our most valued startups, delving deep into what's working and what's not. Today, we're going to look at India's startups in the B2B e-commerce space. Akhil Vishwanath is standing by with the details. Akhil, over to you.
India's B2B market is twice the size of B2C and contributes roughly 2/3 to India's $3 trillion economy. While B2C unicorns are more famous, the likes of Zomato, Swiggy, Ola, Nykaa and others, India has seen the rise of several B2B unicorns too. They're going after what's potentially a $2 trillion opportunity. Today, we look at 5 enterprise commerce unicorns who are reimagining existing supply chains by consolidating India's fragmented business-to-business demand and supply. These companies are fueling the engines of Indian economy, the MSMEs. The addressable market is big, with over 65 million micro, small and medium-sized enterprises all ready to go digital. But only about 6 to 10 million of them actively buy and sell online. So what's leading this digital adoption? Starting with GST, which formalized a lot of small businesses, then cheap internet and UPI, which ushered them into the digital era. The pandemic exposed the fault lines in supply chains, further driving up digital adoption. And now the China Plus One strategy of global manufacturers means many of these Indian MSMEs are looking at a $1 trillion export opportunity. In fact, 4 of the 5 B2B e-commerce startups on our list turned unicorn at the height of the pandemic in 2021. It didn't stop there, though. These billion-dollar startups went on to close multiple rounds and saw their valuations double or triple in the same year. Unlike the B2C peers in the billion-dollar club, India's B2B unicorns have been able to justify their lofty valuations, largely due to a strong pandemic-led growth, scaling their businesses anywhere between 3 to 6 times in FY22. The commentary from the companies tell us that growth seen during the pandemic era could continue, with 4 out of the 5 in the list clocking over $1 billion in revenue in the 2023-2024 period. Off Business, for instance, is looking at a 4x jump over its FY22 revenue. And these companies are doing it with hardly any cash burn when compared to the B2C unicorns. India's B2B e-commerce marketplaces are the most capital efficient among all the unicorns in India. While Udaan, Zetwork and Moglix clocked losses in FY22, their cash burn indicates profitability isn't far away. In fact, all of them are EBITDA positive, which many B2C unicorns are yet to achieve. When it comes to Udaan, it followed a tough period during the pandemic, with challenges in the post-pandemic era multiplying for the company, which runs a B2B platform for small retailers. JioMart and other legacy distributors and wholesalers are back in the game, and Udaan has had to rejig its approach amid the funding crunch. The company says it has made strong improvements in gross margins and operating costs that included laying off 500 employees in FY22. Cash burn, the company says, is down at least 60%. Udaan's financing arm, though, is doing well, having disbursed 4,000 crore to small retailers over the last 2 years. That brings us to the future roadmap of these unicorns. Over the next few years, these companies want to consolidate their offerings to include credit and enterprise SaaS products to keep the business with them. Of course, cross-border opportunities and taking their business global will not be far behind. Back to you.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates continue on the other side. Stay tuned.